Why do closing costs change during the loan process? If you're asking that question, then you've either read about it or heard about it from someone else, or it's happening to you. So let me start with letting you know that closing costs should be boring. I mean, in the best way. Steady, predictable, not dramatic. There's a few parts that can change, but once you understand them, you won't feel blindsided. Most of the costs in a purchase are pretty consistent. The appraisal, the title fees, the recording fees, lender fees, credit report, the regular closing costs. But if your numbers are changing a lot, it usually comes from a few specific buckets. The first one is insurance. Insurance is a big variable. It's really tricky early on to give you an estimate of insurance because if you haven't picked a specific property yet, then you can't get a real quote. Lenders are going to use what's called a placeholder number. Those are based on what their experience is for that particular area, what is reasonable. Homeowners insurance can vary significantly because it's based on the risk level of the home, the age of the roof, things like what the claim history has been. If you don't have real numbers and a lender is just giving you estimates, then they need to be realistic. Otherwise, you are going to be in a position where you're having to come up with a whole lot more money than you're comfortable with. When you close, you're usually going to pay prepaid interest from the day of the month you close until the end of the month. And this is another area that can differ pretty significantly. If you close on the end of the month around the 28th, you might have a couple of days of interest. If you close in the beginning, you'll have a full month. So that can be hundreds or maybe even into the thousands on how much of a difference in the amount of money you need for closing can be. So if you have a lender who is just quoting you at the end of the month, then they may be trying to bring those estimates down, and you need to be cautious about that. If you don't have a contract, then you don't know what the actual date is. But like for us, what we use is a mid-month. We use about 15 days of interest or so. That way you can have a number that you can pretty much plan for as a goal of how much you're coming up with. And we're not just giving you the best possible situation where you're then going to be surprised later. You may not have control over when it closes. It may be the seller who puts that in place. So another area that can create that problem is when it comes to escrow setup. If you're closing, let's say in January, your first payment is not due until the second month after you close. That would be in March. But you're going to have your insurances and your taxes paid when they become due. So what a lender has to do is they have to collect for a little bit of a cushion so that there's enough money in there to pay your insurance and taxes when they become due. And this is another way that I've seen they can be completely off. I've had experiences where other lenders' documents are given to me, and what's happened is they may have only estimated for, say, 3 months of property taxes or 1 month of homeowners insurance. But in actuality, it's going to be a whole lot more. So if your escrows are $600, just being off a couple of hundred, that's over $1,000 that you could be off in your amounts. So let's get to the heart of it. A lot of closing cost shock stories happen because the first number you saw wasn't a real estimate. It was a marketing estimate. And let's be clear, that's not okay. You're trusting a lender to give you an amount that you can base your decisions on. So if you're going through this or you don't want to go through this and you have an estimate from someone who has changed when they get from the original estimate into it, then you need to ask them, what has changed? What did you include for my insurance quotes? Is this realistic for my area? What day of the month did you put down for prepaid interest? And when you're qualifying me, are you pre-qualifying me based on real numbers or just assumed numbers? Because we don't want to have the down payment have to change. And they can let you know what the possibility is of any of those changing. You want to be able to ask your lender, what changed and why? And the answer should not leave you feeling uncomfortable or maybe like a little manipulated. It should feel peaceful and clear, even if there is a difference. If you're feeling a little awkward about a lender quote that you've gotten and you want to reach out for me with a second look, my name is Suzanne Cupit. I'm with Vessel Mortgage. I'd be more than happy to do that. 504-949-0070. That's our number. You can reach out to me. I can look over what you've gotten and let you know where it looks like it stands and if it's realistic,